of callers from New Delhi. Vishesh has a stock query for us. Vishesh, very good morning. Welcome to Ask Profit. What's your query?
Morning. I'm holding Kaynes Technology at 750, 30 shares.
Okay.
So what I have to do actually?
Okay. And how long have you been holding on to them, Vishesh?
I think 3 months back I have purchased.
Okay, 3 months back. I hope, Vishesh, you heard Samir on the last query on Mazgaon Dock and Dixon Tech, because he did provide some view, but let me go across to him yet again, Samir, specifically on Keynes Tech. Now, there was concerns on cash flow generation essentially at this point of time, as well as an acquisition that they'd done in the smart metering space. These were the two major issues. But across the street, there is consensus that the revenue growth that they are projecting for this year as well as next year should be able to happen, and that seems to be the consensus on the street. Would you suggest that Keynes Tech can solve all of its queries? And if you have a view, I hope you do, because this will be a very interesting question and to hear from you as well.
Yeah, so we do study the company. And the problem, what you mentioned, is not the acquisition, it's more to do with the financial reporting that they did. So they have in their consolidated numbers, they have counted certain revenue which is not there in the subsidiary. And the numbers are not tallying, which sends a very negative picture to an investor. If your financial numbers are not correct, what makes us believe that any of your numbers are correct and it's not just fudged, right? So that has been the issue, and which is why the stock has fallen off the cliff. Now, can they probably achieve their sales numbers? They probably could. Look, the space is something, EMS is something that is doing extremely well. The smart metering business is also going to do extremely well over long term. But I have my reservations. The minute it had this problem, we have decided to withdraw our ratings on the company, because that opens up a whole can of worms of risk, and this is something we would not like to invest in. There are so many other EMS companies you can invest in which have corrected. Dixon is down quite a bit. EPAC Durable is down quite a bit. These are companies that you can make investments in. For the time being, let Keynes get its act together. Let the new auditors come in and certify certain things. Once they certify all of that, then we can relook at it. But I may pay a little bit higher if I had to buy.
Right.
So it's something I would avoid at this point. And I ask your speaker to shift.
Okay.